Is it for
PPC makes a range of things. It exports 60% of its products. The managing director has been looking at PVC's cash flow forecast shown in Table 2. He said success was not just about our return on capital employed. The managing director is worried about the introduction of new legal controls to protect the environment. This will mean PVC will have to reduce the number of chemicals that are used to make paint. He thinks these new legal controls will be bad for business.
So there are three things I wanted to note here. They talked about the cash flow. The second thing, it's about legal controls. And the managing director is worried about the reduction in the chemicals used to make paints. Just put these things in mind. So let's go through the questions.
What is meant by return on capital employed? I think it's
ROCE. We call it ROCE, ROCE.
Yes, I think it is like it's a formula or a ratio used to show how efficiently a company or firm is like
run.
Yeah, it's like running the capital of its business to generate profits.
Thank you so much.
And it's a formula, I think.
Yeah, there's a formula for it.
APIC, which is earnings before interest and tax over total assets subtracted by total current liabilities.
No.
This is what I know.
No, okay, I will just put it through this way. So when I talk about return on capital employed, it simply means the measurement of the profits made for each dollar invested. Because we're talking about dollar here. So your return on capital employed is the measurement, the amount of money you make, the measurement of the amount of money you make, the amount of profit you make through the dollars you invested. So the formula is profits divided by capital employed multiplied by 100. So that's the formula. Profit divided by the capital employed multiplied by 100. So you can also say the measurement. It is the measurement of, you can write the formula and get the full mark. It is the measurement of profits for each dollar invested. So that is return on capital employed. I think it's clear. So we go to the second question. It said calculate the following values, X and Y. So let's go. This is a cash forecast. We call it cash forecast. So our cash inflow is that amount of money that comes into the business. Cash outflow is the amount of money we are expected to spend. Listen, the amount of money expected to gain and the amount of money expected to spend. That is what cash inflow is about. So the net cash flow, how do we get our net cash flow? Our net cash flow is cash inflow minus cash outflow. Put these things in mind, okay? All right. Then for the opening balance, you get your opening balance from your net cash flow. So your opening balance will be what your net cash flow is about. And your closing balance for the previous year, for the previous month. So here we don't have the opening balance for the previous month, but we can get it through this. So if our closing balance is 60, we need to find the opening balance, right? And to get the formula for the closing balance is net cash flow plus your opening balance. You get it? So our capital flow or our net cash flow is 40. Our opening balance, we don't know. Our closing balance is 60. So we say
it's 100.
No.
60 plus 40.
No, it's going to be, I said closing balance is net cash flow plus opening balance. So closing balance is 60 equals 40 plus X. So X will be 60 minus 40. So our opening balance will be 20. Is it clear? The third one said Y. For Y, we need to find Y, the net cash flow. And remember I said
it's 60 subtracted, it's the cash inflow subtracted from the outflow. This is it. Okay.
Cash outflow minus
cash
inflow will give you a net cash flow. So that's 620 minus 580. I think it's clear. So the two formulas you are noting now is one, you are able to understand how we get our opening balance, which is net cash flow minus closing balance. And you could get your closing balance through net cash flow plus opening balance. And for your net cash flow, it is your cash inflow minus your cash outflow. That's for question B. I think that's done, right?
Yeah. Identify and explain two reasons why a cash flow forecast might be important for PVC.
So when you talk about why is it important for BVC? One, when you have a cash forecast,
Mm-hmm.
it could be used to request for a loan from the bank. So the bank will be able to say, oh, this is what we are expecting.
Mm-hmm.
So if you are able to give us this loan, so BVC could use it to request for a loan.
Mm-hmm.
I think that is clear.
Yeah.
Number two, it could allow BVC to manage its cash flow
Mm-hmm.
properly. Another reason could be it allows BVC to know where the cash flow problem would be from.
Yeah.
I think that is clear.
Okay.
Okay, then D.
Identify and explain two possible problems for BBC when exporting its products.
So when you are exporting your product, that's exportation.
Mm-hmm.
One of the problems you could face when you are exporting is difference in language.
Mm-hmm.
That's number one. Another problem you could face is the exchange rate.
Yeah.
That's number two. Another problem you could face is government restrictions, which could be quotas.
Yeah.
So the government of the country that you are exporting to might give the quantities that you can be able to export.
Okay.
So those are the problems about that.
Mm-hmm.
And E.
The managing director thinks the new legal controls to protect the environment will be bad for business. Do you agree?
We could say yes and we could say no. So let's talk about yes and no.
Mm-hmm.
For yes, I would say yes because now reducing chemicals for the paints might reduce the quality.
Mm-hmm.
Do you get that?
Yeah.
So if you are reducing the chemicals you are using for your paint, it means you are reducing the quality of the paint. And reducing the quality of the paint might make customers to stop buying from you.
Yes.
So it could reduce revenue for the business.
Mm-hmm.
And we can say no, because when you talk about legal controls, it's not only going to affect BVC, it's going to affect its competitors too.
Yeah.
So it's not going to be a problem there.
Yes.
Do you understand? And another reason why it might not be a problem is that customers might like businesses that are socially responsible.
Mm-hmm.
So they want to deal with businesses that respect the environment.
Mm-hmm.
So that means it could improve sales for BVC.
Okay.
Clear, right? So that's all about A to E. So I will write them out now.